Weekly paycheck from AMD? That's exactly what AMDW is designed to do. AMDW is the Roundhill AMD Weekly Pay ETF, and it aims to give weekly distributions and track 120% of AMD's weekly return before fees and expenses. That means if AMD goes up in a week, AMDW tries to deliver 20% more of that gain. But if AMD falls, losses can also be magnified. It's not a covered call income fund. It's a leveraged weekly exposure to one stock with weekly pay. In this video, I'm backtesting AMDW's strategy, weekly income plus enhanced AMD returns over real market conditions. So stay tuned. Welcome back to Simply Money. For those that are new to the channel, thank you for joining us, and I hope you find this video interesting and educational. This is not financial advice. It's for information and educational purposes only. Please do your own due diligence and know all investments come with risk. So in this scenario, what we do in these videos in the series is I take a $525,000 income portfolio and I throw it all in this one fund in the starting dates and see how they have fared. And I know a lot of people have questions on this. We're going to see what $525,000 would have looked like from inception on this fund, which is August 12th, 2025, a very new fund, not even a year old. How is it done? What have the distributions been like? What does it look like if you drip 100%, 50%, and no drip at all? And then we'll do a variable drip where we can set it to fine-tune what we desire to do with this. Looking at this, we have to remember it is a weekly paying fund. So each of these distributions is happening each and every week. So with $525,000 and August 12th at $54.35, the share price would get us 9,660 shares. August 12th, and I know you'd say, well, if you owned it August 12th, you wouldn't get this distribution. Bear with me if we're a day off here. We're not going to be exact. We're getting very close. So just follow along and you'll see the understanding of this. You can change the dates here and you can change the amount that you start with the investment there as well. We're doing the $525,000 to stick with the scenarios that we've used in other videos and just comparing those. So with the first distribution being $1.36, your dividend on a full drip would have been $13,211. Not bad for the first week of owning a fund, getting that, but you're reinvesting that. So you add that right here and you can see the new total shares you have is 9,903. The next week you get $11,000, reinvest that, and so on and so on. So as we come down, let's start with the share price. Started at $54.35, then see some dips here and shot back up, got up to $72 in October. Then November and December, it came down. It's been a rough November and December for a lot of funds. And so it's starting the new year on January 6th, the last date we have here, of $49.86, we're down negative 8% on share price. It did have some increase, which is nice to see. We need to see this longer. This is very short term to look at any kind of fund, any stock, any ETF. You're looking at 6 months here is very short time frame. And so you can't make any full judgment on that, but it's had some nice movement. It's rose, it's come back down. We want to see if it can climb back up as the market changes. Now here we have the distribution, which for a lot of people, this is rough. The distribution is very volatile. We have $1.13 or $1.36 when we started. $1.13 went to 64 cents. Look at this, got down to 30 cents. I can see people crying out here like they bought it in August and then September going, oh my God, this sucks. I got a $45 share price. I'm only getting a 30-cent distribution. What is going on? Let's see how this fares through this time frame though. You can see the share price came up, the distribution came up, got all the way to $1.49 right here. And again, it dropped back down to 56 cents. Look at this down here, December 2nd, 26 cents. And now we're hitting 77, 50, 60 cents right in there. So the distribution has been all over the place. That means your weekly income, if you're looking at doing this, and this is on full drip, look at this, you had 13,000, got down to 3,000, then you got up here to 16, almost $17,000, and you're ending here at $8,000. But again, on this scenario, all of this is being reinvested. It really doesn't matter other than you're gaining more shares. And in this time frame, you've gained 3,544 shares. What has that done for your total portfolio balance? Has gone up $133,000. That's not too shabby. From August until the beginning of January, you've gained $133,000 in your portfolio balance. I'd be happy with that. But let's see what happens in other scenarios. Let's go to the 50-50 where we take half of the drip, we buy more shares. You can see half of the drip amount, half of the distribution amount here, and the other half you take for income. So this amount, you just do it twice. Once, the 6,605 is buying more shares. And then you take $6,605, and that's your income. So this amount in this column E, whatever amount you see, you have two of those. One is for income and one is for reinvestment. So as we come down, you can see these volatile incomes that you're getting, and you get 6,000. Up here we got up to 7,800, and then it goes down to 1,400. And here the last couple months we've been right around 3,600. But over this time frame, think about this, in this short time frame, you've gathered $91,000. You've also gained 1,641 shares, and look at this, your portfolio balance is up $38,000. So in these first few months, you were able to get $90,000 and increase your portfolio balance. That's performed pretty well even in a 50-50 scenario. Now let's go with this for those who invest and then they need the full income to live on, or they need the income to invest in other things, whatever they're using it for. You're getting your distribution. You're not adding any new shares. So you have the same number of shares. You'll have this 9,660 shares all the way through. So your distribution amount will determine how much that you're getting. So you're going to see this fluctuate dramatically. You started out with that 13,000, and look at this, because you're not increasing share volume, you get down here to 2,000, go back up here to 14,000. It's been pretty volatile, up and down, but over the course of this time, if you were taking the full distribution, you would have got $168,000 distributed to you that you could have been living on or doing other things with. But your portfolio balance in this short time has dropped $43,000. Now, again, we've seen a pretty big drop from the end of October. So November and December, it's dropped pretty bad. If we look back here in its peak of October, it got up to almost $700,000. That would have been nice if it had maintained, but it went down. What will it do going forward? We'll have to watch and monitor. That's why we do these scenarios, so you can see the power of this and the fluctuation. This is a very volatile, very high fluctuating, the share price, the distributions, so thus your amount of income, everything is very volatile on this one. But let's look at our total returns. You got to remember, this here is your market value, what your portfolio is worth, but you have to always add in the amount of cash that you've taken to get your total return. So with the full drip, your total return is that $133,000 market valuation growth. You have a 25.39% total return in that short period. We're not even talking a year. That's only in 5 months that we're looking at here. So we're seeing very strong total return for this fund, even though it's been very volatile. Now over here in the 50-50, you got to remember you got $91,000 in cash plus your $38,000 market value increase. That's $129,000 total return for a 24.67% total return in that 5 months. Again, very excellent, strong return. And this is where people miss it on these types of incomes, because if you looked at no drip, you were just taking the income, you've gathered $168,000. But a lot of people look at just this. They see the share price. You're down 8%, negative 8% on your share price. So your portfolio is down $43,000. This is what a lot of people look at because they forget to add in this distribution amount for your total return, which your total return with this, if you take this distribution minus what you lost in value, your total return is still 23.88% in 5 months. That is incredible. That is still a strong return. Now, will it continue to be this strong? We don't know. We have to continue to watch this. But this is something to keep in mind when you're looking at these types of funds. Don't look at just the share price. Yes, you want to watch that and you want to watch the distributions, but we want to see total return. That's really all that matters. Even if you're getting a killer income like this, let's just say you did get this strong income, but this total return was negative because this had dropped significantly more, that wouldn't be very positive fun to look at. But because you got such a high distribution, I don't really think you need $168,000 in 5 months. Maybe you do, but if you're only doing $525,000, I highly doubt you need $168,000 every 5 months. This is my thinking there, but I could be wrong. So let's go over here. This is the adjustable rate that we can put. So I put in 25%. What we do this for those that are new to the channel, is we started with $525,000. So we want to make sure that we're balanced at about $525,000. So we want to see in this back testing, how much would we have to have reinvested to maintain our balance? Now with this one, it's been very, very volatile, so that could have changed, but we're just going off the time frame we have to see, back testing what it would have been. Maybe going forward, you need to invest more or less to keep that balanced. But we set it at 25% you're going to reinvest, so you're adding some shares, and this is the amount that you're reinvesting in this column, and then you're keeping 75%, so you can see you're getting a $9,900 weekly paycheck and adding some shares. At the end of this time frame, we're down in this, I didn't put it exactly, but you're down $4,000, so very much maintained your balance, and you collected $131,000 in your distributions. So $131,000 in distributions that you've taken home, and you maintained your balance. Maybe you do 27%, 28%, whatever the case might be. And for those that are wondering, most brokerages don't have a percentage that you can do. If you wanted to do either full drip, which you turn it on and it automatically does it for you. So when you get a distribution, it automatically just buys more of the same share, or you turn it off and the distribution just goes into your brokerage account, then you can do what you want with it. So what you'd have to do is you'd have to take 25% of it and reinvest, and take 75% and send to your checking account or wherever you want to put that. So you have to manually do that. So there's been some confusion, people wondering, can you take your brokerage and set it at, I want to drip 25%? I don't know of any. If there's anybody that knows of a brokerage that does that, leave it down in the community below and I'll do some research and maybe I'll do a full video on that company, but I don't know any that do that. So please share with us if you do know that. What are your thoughts on AMDW? Do you own it? Do you like it? Do you want to own it? And here's a very volatile fund that shows you that there's still power in this reinvesting and income portfolio. Leave your comments. Let's get a community chat going. If there's other funds you'd like to see run on these scenarios, always leave those in the comments. I have a whole list of them that you guys are providing. I'm doing these because these are the ones you want to see. If you like this AMDW, you want to play with it yourself, you can get a copy of this AMDW drip sheet on my Buy Me a Coffee page. Those are available there, as all my spreadsheets are. Feel free to grab one there. I appreciate all the support you guys have given me. The best way you can support the channel, if you want to support us, is to hit that like and subscribe button. And even more so, share it on social media with other people. It really helps the algorithm. YouTube likes it when you share it with other people, because that means, hey, not only did they like it, they shared it with someone else. They liked it that much. I appreciate your support and your conversations and everything you do for the channel. And we will see you next time on Simply Money.